Hello, techies. Welcome to the Tech Ties Africa podcast, where we'll bring you the latest stories on tech and startups in Africa. Catch us every Thursday at 10 a.m. WAT on techtidesafrica.podbean.com. Let us know what you think by giving us feedback in the comments or on our socials. Now, on with the show. Hello and welcome back to the Tech Tides Africa podcast. We talk about tech and startups in Africa every week. And this week is no different. We have a couple of headlines that happened over the previous week. And let's get into it. How are you doing today, Karen?
Hello, Kelvin. I'm excited. A little bit under the weather, but looking forward to the topics that we have lined up. I think we have some very interesting things going on, from legal drama to reclaiming Africa's financial credibility. So, looking forward to getting into that.
Yeah, we have some interesting topics this week, like Safaricom. So let's get started. We will start with the Africa's credit rating proposed launch by September. Basically, a new African-led credit rating system is being proposed to begin operations by September of this year. The goal of this is to create an alternative to the global big three agencies, which are Fitch, Moody's, and S&P. I mean, this isn't much of what I would normally look into, but I would like to hear your take on this. Karen, what do you think?
It's a really exciting move, to be honest with you, because I think as a continent in Africa, one of the biggest challenges that we face is other people who do not understand us create the rules for how we operate. And that has been a very big challenge. When we rely on Western credit rating agencies, there's a bias and unfair assessment that happens because the way that they assess, I feel, is based on the Western way of looking at things. They don't do it from a place of understanding, a context aware basis. So I think that this launch of the Indigenous Credit Rating Agency will create that balanced, fair, context aware space for us. These ratings will affect how we borrow as a continent, how the countries in Africa borrow, and at what cost we get to borrow. When it's done by Western ratings, they overlook our realities from a local perspective. So you'll find that, for example, they will label politically stable, low income nations as high risk, while there are some volatile but rich nations that will be overrated. And I think that becomes a challenge. So I'm hoping to see that this solution will unlock a more fair way of accessing capital for us as a continent and boost investor confidence as well in the African economies because of the manner in which we do the rating. And I think that that could be good news for startup ecosystems because the rate at which we borrow money as nations will affect how our businesses borrow as well. So I'm looking forward to seeing how that will trickle down to the cost of living within our economies, but also to the cost of capital for our businesses within the African context. So I think this is really good news. I'm always happy to see Africans choosing to do things for ourselves as opposed to relying on other people to do it for us. So I think as a podcast, this is something we constantly discuss, creating our own solutions that are context relevant. So I think this is a good move.
Yeah, I agree. When you explain it like that, it makes a lot of sense. We'll see how this affects credits moving forward. I believe it is something that we do need because Africa is just a different space from the West and the global East as well. So having a solution like this that would hopefully work for the countries in Africa improves our credit system moving forward. So I look forward to this launch.
Absolutely. And I think what you're saying about seeing how it goes is great ideas live and die on execution. So let's see how they will do the execution. Okay, more news. There's a new U.S. Nigeria trade deal that could possibly unlock more investments for Nigerian startups. which is very interesting because there's a global slowdown of funding right now, and Nigeria, still doing too much as usual, is closing up a deal. I could see them working together, the US and Nigeria working together. This is a 5-year agreement. It's a renewal of commitment because I believe this has been there for a while. And the companies in Nigeria will now have access to US capital markets, deeper access. I think that a lot of Nigerian companies, about 60%, are incorporated in the US as we speak. And that allows you to get a lot of access to the US capital markets, which are valued at over $120 trillion. I think this is very good news because the manner in which the US does its investments, gives credit, is very different from the way we do it in Africa. I'd like to hear your thoughts sitting in Nigeria. How do you think this will affect the tech space, the startup space?
Yeah, at the end of the day, I think funding has to come from somewhere. And in a lot of the case, especially with Nigerian startups, we see that that funding comes from the US a lot of the time. And Nigeria and the US have a long standing relationship working together. So this is, like you said, just a renewal of that commitment. I know a couple of years back, one of the things I noticed was that a lot of these Nigerian startups incorporate in the US. I guess it just makes operations easier for them, and also raising funds. For example, if you do want to get some of that capital from the US markets, it's just easier if your company is incorporated in the US. So we have seen a lot of Nigerian startups go through that route. And just having this agreement there as well makes it even more easier because there's some understanding between the countries diplomatically. So it makes raising funds easier. And later on, we would look at funding in the first 6 months of the year is on the rise. But beyond that, I believe that you need to get funds from somewhere, and why not from the place that has most of the venture capital in the world? So having that would be a good advantage for Nigerian startups.
Yeah, I agree 100%. And I think with this renewed confidence, it's up to the startup founder to ensure that they have set up the structures that make them attractive to investors that are coming in. So sit down and figure out what are the things you need to do so that you're more attractive to the investor.
Yeah, I wonder what this means for the tariffs that the US has already imposed on most countries, including Nigeria. Does this also affect some of this funding that could come from the US markets? I guess time will tell, but it's just something to keep in mind as well as we monitor this story. Moving forward, Safaricom has unveiled a $500 million AI strategy. The investment will target sectors like agriculture, health tech, and financial services. Personally, when I saw this news, beyond the fact that I would talk about Safaricom a number of times on the podcast, I was surprised because Safaricom is supposed to be a telecom company and they want to develop artificial intelligence infrastructure across East Africa, which seems like a big pivot in another direction. So when a big company like that makes a move like that, you have to pay attention, definitely. So what did you think when you saw this?
So I have a couple of thoughts. First of all, Safaricom is known for sometimes moving outside of its core business. At some point, it was hosting jazz festivals. They had an e-commerce space. They sell phones and laptops. So they at times expand their portfolio of products and services that they are offering. And I think this is one of those moves. Obviously, there is the question of whether this will be something that they stay on long term. I do think that they will because this is where the future is going. When I look at the kinds of things that they're wanting to deploy, things like AI-ready data centers, cloud platforms, developer ecosystems, I think this is something that is long-term and will serve a lot of startups in the country and in the continent, as well as enterprises. So it's something very exciting to me. Obviously, there are some worries that people have brought up, whether this is going to be something that they focus on just alone, or whether they're bringing in more partners into it so that they open up the ecosystem. And I think that they are committed to doing that based on the press releases that they gave, where they're bringing in partnerships with universities and regulators. We've seen them educate people on where the future is and bringing in more knowledge. So that is exciting. This is one of the largest AI investments in Africa to date, and it signals how major African enterprises are preparing for the next phase of digital transformation, right? And I think this is just the beginning. We will see Safaricom being one of the largest companies. It's $1 billion company in Kenya. And I think that's one of the largest companies in East Africa. I don't know about Africa, but I think it's among those, not unicorns, but major Fortune 500 companies from the African context. So I think it's only normal that they would be a trailblazer in this new strategy, this new evolution that is happening. So this is, I think, a really great move in the right direction for startups who are building AI solutions, because they are focusing on things that we need from an African context, right? Agriculture, healthcare, logistics. This is an opportunity to start pitching enterprise grade products and to collaborate and create something that can be invested in by some of these corporates. So I do believe that it's a really cool move. It's a lot of money if you look at it, coming from someone who understands the African context, which makes it even more exciting, in my view.
Yes, I believe it's very exciting news in terms of it's a company that understands the landscape in Africa that is making a move in this direction. And I always like when big companies do something like this. They kind of set the pace for a trend that they notice going forward. Of course, there is always the threat of monopoly and things like that, especially in the market of capitalism. But someone has to put that money in, someone has to build the infrastructure for this new technology that is taking the world by storm. For Safaricom, they are positioning themselves, as all big companies do. If they are building the infrastructure for AI technology, then you see that they would always have business, even if they are not building the AI models themselves or building the AI solutions. You would need their data centers and things like that to run your AI models if you're targeting people in Africa. So it's a very smart play on their part. I believe a lot of companies and startups that are building AI solutions will benefit from these investments if they are targeting the African market. So smart play on their part.
100%. And it makes me remember this saying that I used to hear a lot when I was younger. During the gold rush in, I think, South Africa, the people who made the most money were not the ones who were looking for gold. They were the ones who were selling the shovels, right? So I think setting up the infrastructure is an example of that you're not the one who's actually developing these AI products and all that. You're just setting up the infrastructure that people will need in order to make it operational, which is a smart move. Still on Safaricom, they have decided to leave Genghis capital at the altar. So in 2019, they came together, Safaricom, which is a telco, and then Genghis, which is an investment bank. They came together and launched something called Mali, which is a money market fund that was geared towards in Kenya, we call him the common mwananchi or wanjiko, which is the average person, right? So you could invest as little as 100 shillings, which I think is $1. And it was their first step into regulated finance. So they came together. They've been testing this for a while, since 2019. And they had a lot of success because, remember, Safaricom has access to so many people. And I think that is the new oil, right? The new oil is attention. The new oil is access to people. So by 2024, it had been ranked the 17th biggest collective investment scheme. It was serving more than 700,000 customers, and it managed $3.1 billion Kenya shillings in assets, which is just brilliant. It shows you what access can do. However, now this was a test phase, right? So once the test phase is over, they're supposed to now go live and big on it. Then Safaricom played some kind of game that I'm not sure what to call. And rather than stick with Mali, it goes out and creates something called ZD with absolutely new partners. So Standard Investment Bank, ALA Capital Limited, and Sanlam Investments East Africa. They come together, they create something new. And Safaricom says that Genghis, I hope I'm saying this the right way, Genghis technology infrastructure is too fragile to scale. So it was necessary for them to create something new for them to be able to scale. And Genghis is saying, wait, there's some foul play, right? We had an agreement which you have broken. In addition to that, there's some data breach that is happening. So this is a claim that is being made by Genghis. They're like, you transferred people from Mali to ZD without their knowledge, which could create some issues, especially now that we have seen on the podcast over the past couple of weeks that data security is becoming a big problem. But I think these are things that we see in business every day. I'd like to hear your thoughts on this game that was played by these guys. What do you think in terms of data breach, and just what are your thoughts in general?
My thoughts in general is that it's from the outside, it looks like the big guy is bullying the small guy. We just touched on how massive a company Safaricom is. And at the end of the day, they may not need a company like, I may not be pronouncing this right, Genghis.
Genghis,
But
Genghis, who knows?
I don't know.
Please
I'm
forgive
sorry.
us.
But yeah, we can only speculate given publicly available information. But it seems like the big guy is bullying the small guy. They have done this test run, and Safaricom obviously sees a lot of potential there, and they want to control as much of the solution as they can. But then they may have legitimate issues. Like one of the things they said is that they don't trust the technology of Genghis to scale. And maybe during this test phase, they had seen a couple of indicators that suggested that. And that's why they explored other partnerships. But from the Genghis side, this solution means more to them in terms of their revenue and profits than it does for Safaricom. So it would have been a big solution for them. And now they are being sidelined out of the equation. So obviously, they would point some fingers back at them. In terms of moving user data between platforms, this is something that, well, except there is some public court ruling that shows that this was actually done, then it just remains an allegation. We won't be sure. But if they decided to take this up in court, there is the Kenya's Data Protection Act that would definitely be used in this case. So it's a bit of a messy situation. I have no dog in this fight, but I guess we'll see what happens.
Yeah, but there's something that it brings up that I think we talked about a couple of weeks ago with a founder in Nigeria. I can't remember the name of the company, please forgive me. But he was doing something in transportation and now he was pivoting. And I think what we are seeing here with Safaricom and Genghis is the power of data and distribution. Your access to data and people is king right now. And I think that's something that we also saw a Proco doctor taking advantage of, where he got data, he got access to people, and then he used that to build a business on. And I think that's something for founders and for startup founders and people in tech to think about: access to data, access to distribution, having a large amount of people that you're able to access. And one of the things that we see in marketing is the importance of your emailing list, right? Or the community that you have built. And based on that access to people, access to data, you're able to have more control in today's world than even just capital. I think right now, as we speak, the ability to access people can open up capital. More than capital can open up things. So I think that's something to think about as a startup owner and a tech founder. Where is it that you can get access to data and access to people? Because that right now is king.
Yeah. Just before we move forward, I was just looking up Genghis Capital, and it turns out they are not such a small guy as I initially thought. They are a leading investment solution provider in Kenya. So, I mean, they should have enough muscle to take up Safaricom, or at least enough to win a case if it does come to that. If they wanted to explore that, depending on how much this means to them, or they could go in another direction. So, yeah, just wanted to correct that. Moving forward, Africa startups hit $1 billion in funding for 2025. At the moment, Egyptian startups are in the lead. It seems, especially in the last 3 months, I believe, startup funding has been on the rise. We started on a high in January, raising $289 million, but momentum dropped in February and March with $119 million and $50 million, respectively. But in April, it started to rebound, $343 million in April and $254 million in May. This month, we have now gotten all the way to $1 billion in funding. I mean, if you're projecting based on that, you would see that about 2 billion, at least by the end of the year, which if you compare it with last year, it's just a bit more. And if you compare it to the highs of like 2021, it's still below the funding that we're seeing back then when there was a lot of investor appetite in African startups. But funding is on the rise at the moment, and I guess it says something for the African market.
Yes, I think what we are seeing is a return of investor confidence, which I think had dropped for a while. I don't know what we can blame that on. Perhaps economic issues that we've been facing post-COVID could have been part of that. Obviously, we're seeing still the big four are the ones that are taking up the bigger chunk of the investments. And we do have an article on Startup Graveyard. I always mention them because I think they're quite helpful to any founder that's thinking about it, where we were talking about what is happening outside of the big four and some markets that are coming up that are very interesting that an investor can look at. And it's interesting that Egypt has taken over right now. They took up like 31% of all the disclosed fundings that have been raised so far. The country has 16 deals closed and they raised $330 million. So that's quite a good space to go. And then we saw South Africa coming in second, Nigeria, and then Kenya coming in after that. I didn't get a chance to see which other countries outside of the big four have gotten any funding. And I think that would be interesting information, and I'll definitely look into that. Now, some of the deals I'm seeing are coming from Saudi Arabian investors. And I think that's something that I want to discuss a little bit, where as Africa, we're seeing a lot more funding coming from the East. We're seeing a lot more funding coming from Arabic nations, and they seem to be having quite a big interest in the African ecosystem. I don't know whether you've seen that in Nigeria. I've definitely seen a lot of it in Kenya, which is a great thing to see. Another thing I would add is this. It's really amazing that we're seeing all this funding coming in from the outside. Yesterday, I was reading an article on LinkedIn someone had written, and they were talking about how low local investment is in Kenya. And I think that's something else to think about. How can we also start raising funds within the continent itself? And I think that's a conversation that needs to be had, where it's amazing that we are seeing external investors coming in and showing investor confidence in the continent. But I also think that we need to start seeing internal investors have more confidence in the continent and have a lot more of the money in Africa stay in Africa. So that's something that I'm looking forward to. But I think this is really amazing. 2.5 billion raised from June last year to June this year. I think that's good news that investor confidence is coming back into the country. I think over the past 2 quarters, Kelvin, on this podcast, we've been able to discuss some really big wins, and we're about to discuss another one. Some really big wins in the African continent and the startups that we have, which I think only grows that investor confidence, especially in the fintech space. And today we're discussing one that is really shocking, which is in the e-commerce space. So the more we see unicorns grow and the more we see profitable exits, the more confidence we will experience from external investors. But I hope that it will also grow internal investors in the continent.
Yeah, you raise a good point there with the internal investments. And I know I've seen some conversations about it on Twitter as well, in my case, where we don't see as much investor confidence from investors internally. And in some of these conversations or some of these events that I've been a part of, some of it comes from skepticism with the entire startup thing, in quotes. Many investors within are not so keen on startups because it's not something they feel they can take a chance on at the moment. For us in the space, it feels like startup is everything. But people out of the startup and tech bubble do not see it like that. They see it as very high risk for them to take a chance. So we are not seeing as much investment coming from internal investors. And in some cases, when there has been investment, in some conversations I've heard, these internal investors want to get returns fast and they put a lot of pressure on the startup founders. So I guess it will still take some time. We still need a couple of more success stories, maybe like the one we'll talk about next, to get enough investors on board from within the continent. But for now, they are still skeptical about startups. So that's what we see playing out. But beyond that, the funding that's coming in from Saudi Arabia, I think a lot of it goes to Egypt and that region mainly. And we have seen like Egyptian startups, they do have a lot of massive deals. So you mentioned earlier 300 and something million coming from 16 deals. That's a lot of funding per startup when you think about it. And we don't really see massive deals like that in the rest of the continent. So Egyptian startups do have that close tie to the Middle East, and I believe that's where majority of that funding from Saudi Arabia is coming from. So it's quite interesting to see if that starts to trickle down to the rest of the continent. But yeah, those are my thoughts on that.
Yeah, we've definitely seen a bit of it in Kenya. So I'm looking forward to seeing how it goes. Now, onto some really amazing news. In a sector that we have been hoping will grow, which is the e-commerce space, Silverback has gone for a partial exit from OmniRetail, and it has 5x'd its returns. And this is it, the ninth profitable exit. So that is like, whoa. That kind of shocked me a little bit. So the holding company has sold a portion of its stake, and this is for OmniRetail, let me just be clear. And we just saw them go through a 20 million Series A raise, and they actually got an internal funding. Good news on both ends that we've just been discussing, from a manufacturing titan. It's called Flour Mills of Nigeria, I believe. And this is Silverback's ninth profitable exit. I want to hear this from you because this is obviously happening in your backyard. First of all, I've never heard of OmniRetail, shame on me, but this is like really amazing to see. And I'd like to know, Silverback's holding is an African focused private investment firm, but is it African or is it just African focused? That's something I think I need to find out. But I'd like to hear more from you on this because this is a lot of success. A 20 million Series A raise and then an exit that 5x's its investors. That is a lot of confidence in one organization.
Yeah, I'm surprised you haven't heard about OmniRetail because they have been ranked one of the fastest growing startups in Africa for a couple of years now. And it's not a company I even actively follow like that, but I always just see them in like headlines about fastest growing startups in Africa. They are into distribution, so basically fast moving consumer goods, and they've managed to create a platform where they can bring the distributors and retailers onto their platform and streamline the distribution process. That's really a tough puzzle to solve, especially in a continent like Africa. And there has been a lot of optimism. I have seen them raise a couple of different fundings in different times, and they seem to be doing very well. They brought a legacy company like U.S Nigeria into the startup investment markets, and we're just talking about having internal or local investments in startups. Something about new retail convinced floor mills to get into giving them funding. So they're definitely doing something right. There's definitely a lot of potential with these companies when you start to see the companies and investment firms that have put in their money into them. Again, we need more stories like this. We need more investors to get returns on their investments, and that would encourage even more investors to put in their money. And maybe, like you talked about previously, maybe it starts to get local investors curious enough to start to invest in startups. So it's definitely good news. I hope we see more of this throughout this year. We have seen a couple at the moment. MoneyPoint was one, We Capital, and now Silverbacks with OmniRetail. So hopefully we can see a couple of more before the year ends and it starts to compound. Then you get even more interest both internationally and locally.
Yeah, so just a few points before we move on. First of all, really excited that this is not a fintech. It's in a different industry. So that's really good to see. Kenya, please, my friends, we have to do something. These things cannot all be coming from Nigeria. My people, please, give me something to announce proudly. I need some good news from East Africa. Not even if it's not Kenya, from East Africa. Let's have a good exit, like something a 5-10x deal. I'm waiting for that one. So yeah, really good news that it's not fintech, it's e-commerce. I hope that we can see things in healthcare coming up, something in agri-tech coming up, something maybe even in green technology coming up, just outside of even logistics, something outside of the norm, which has been fintech a lot. So this, I think, is a good move in the right direction. It's e-commerce, it's B2B, which is really cool to see. I'm looking forward to seeing something in agri-tech in caps, because I think that's very locally relevant. So I hope to see some of those coming up in the next couple of months.
Yeah, it would be nice to see things in these other sectors. And yeah, let's see how it goes. Maybe Kenya is waiting for you to build the startup.
I am coming. I am here.
We are watching this space. Yeah, we are watching this space. All right. Moving forward with the last story we have, Money Points is in the headlines again, but it's for a negative reason. And it's about some disagreements with stock options between an ex-employee of MoneyPoint claiming that they engaged in some malicious actions to deny him his stock options. And this is shocking, especially because MoneyPoint has been getting a lot of good press recently, and they are just expanding and being very successful, really. So this is like the first negative news that I've seen about them, and it's an interesting time that it's coming at. But I would allow you to walk us through the story and what you think about this report.
So it's interesting because last week we spoke about how big some of their employees won, right? They became billionaires overnight. Okay, not overnight, but yeah, overnight, which was really cool to see. And it's interesting that this ex-employee has decided to bring it up now. I think based on the fact that he feels maybe he would have won big as well. This is a court case. I don't think it says that Moniepoint is guilty of anything. We'll wait to see what the law says and how the courts decide. However, it does bring up an issue that I think founders and startup owners need to think about. And I think we've spoken about this before, and that is making sure that your employee contracts are very clear. If you're going to do an ESOP, employee stock option, make sure you have an employee stock option plan that is very clear, that is legally backed, right, and is well documented from the beginning, because these are some things that can happen. I know that for some companies, when you're getting into an employee stock option, you have to work with them for a couple of years before you get access to it. Now, I don't know if that is the way that they had structured it for Moniepoint. So I think if you are a startup founder, this is one of the tactics and strategies that we talked about would be very good if you need to attract very highly qualified staff, but you do not have the money to compensate them on a monthly basis at their point of expectation or value, right? So you give them this because it tells them that when you win, they win as well. But if you're going to do that, you need to make sure that you are very clear in terms of documentation. It could help to have a lawyer when you're setting these things up, and you need to make sure that everything is documented from the beginning and it's very clear and it's signed. You need to sign it, the employee needs to sign it, they need to be clear on what is expected. If they quit at a certain point, they need to be clear that that locks them out of those stock options, what locks them out of it and what opens them up for it. It needs to be all really clear so that in case someone comes with a claim like this, you will be able to answer that in court. Because if one of the biggest challenges that you have as a startup is that a lot of things are word of mouth, and you find that your structures are not very good, your documentation is not very clear, and so someone can take advantage of that and find a loophole for that and legally sue you. And as we know, a lot of times when it gets to legal suits, the law tends to favor the employee more than the employer. So you need to be very careful and be very clear with your documentation. At this point, I think we'll just have to wait and see where the law leans towards, based on obviously how well Moniepoint has documented everything that it says. Because based on what I've seen is this employee actually created a lot of value for the company. He developed a lot of their infrastructure, their technology and infrastructure. So waiting to see where the law will lean towards.
Yeah, it's now a legal case, so we would have to see what the court proceedings say at the end of it. But from the available reports, it says that he was meant to stay for 5 years, and he did stay for 5 years from 2016 to 2021. He wanted to leave at the 4th year, but the CEO urged him to stay, reminding him of his stock options as well. And he decided to stay an extra year, but at the end of the extra year, he turned in his resignation. And from what he says, it doesn't seem the CEO was too happy about that. A couple of days before his resignation, he asked about the stock options, and he didn't get a report until something like 3 months later. And by then, they granted him the window to vest the stock options, but the window was too short. So it was meant to last from January 9th, 2022 to April 9th, 2022. But then he only got access on April 4th, according to him. So he complained about the short window and was assured that they would look at it again and get back to him. But he didn't hear from them again. And by the time he checked the platform, Kata, to check whether he could vest the options, he saw that it had expired. And that's what now started the entire legal battle. So I guess that's where the malicious actions he's referring to. And yeah, it is quite sad, I guess, for him personally. You have been at Moniepoint all this time, and then again, it's curious. The news came at this time because it was just last week we talked about those employees that got a lot of money from their stock options. He probably saw that report and then started thinking about his ongoing legal action, because it has been in court for a couple of years now, 3 years. So that's probably prompted this new reports to come out. So we would have to wait and see how this turns out, I guess.
Yeah, I definitely get that, because I'd also be very, be very pissed off if I was in his shoes. Obviously, let's wait and see. It's very hard to say who's right and who's wrong. Obviously, as people who have worked with startups, sometimes you feel like you want to lean on the side of the employee, because it's really easy for you to be denied a lot of things as an employee, which I think is why the law leans towards us, and it's up to the employer to prove that what we're accusing him of is not true, right? So yeah, let's wait and see, because I do think that he was a key employee for the company. I think he played a really big role based on what he claims he did, and from that perspective, he should be given what is owed to him, especially if he had to stay an extra year that he did not want to be there, just to ensure that he got this stock option. So yeah, let's wait and see.
Yeah, I would be pissed as well. I would be pissed. I would be pissed that then Kelvin and Karen are talking about this generation and money on their podcast. Yeah, I'll be pissed. But yeah, it's all good. We will just wait for the verdict on this. Hopefully, it doesn't take too long. It has already taken. That's the thing with court cases, though. It's already 3 years and there is no verdict on that. I don't like court cases. I hope I wouldn't have to be involved in court cases. Anyways, I think we'll leave it there. So thank you for joining us on this episode of the podcast. Do leave a comment about any of these stories, and we'll catch you on the next one. Thank you for listening to another episode of the Tech Tides Africa podcast. Remember, leave a comment or share with your friends. We'll see you next Thursday at the same time and place you get your podcast. Until then, stay well.